My name is Sid Haas. I'm the Vice President of Business Development here at LKCS, and I want to welcome you to today's webinar on social media compliance for financial institutions. And that's what we're going to be talking about. For those of you not familiar with the company, I'll introduce you really quick to LKCS. We've been providing marketing services to financial institutions nationwide since 1961. We provide a wide variety of services in both traditional and digital marketing, across numerous channels, web, print, and statement channels, all data-driven marketing solutions, and of course, social media being a growing piece of our business. Today's presentation is going to, focus on an overview of social media, what it is, why banks and credit unions are participating on social media. We're going to spend a lot of time on the FFIEC social media guidelines, going through them in a little bit more detail, and then talk about managing social media and its challenges, and hopefully, spending a little bit of time on what makes effective social media content. And if there's time at the end of all of that, some time for questions and answers. But there's a lot of material to cover. I preface the presentation by saying that I am not an attorney, and I don't want to be an attorney. So the information that I'm presenting today is accurate to the best of my knowledge. I've been doing this for a few years, more than a few, but please be sure to have your compliance team review anything that I'm saying, all of your policies and procedures, all of your social media posts, and everything to make sure that they are, in fact, compliant. So what is social media marketing? I like to define, what I talk about, but to me, social media marketing is the process of using interactive online communication platforms, and we'll talk about what that means, to engage both your potential and existing account holders. And some key ideas that I've put forth here are social media is all about engaging people and having conversations with them. And social media communities have to be built. It's not like Field of Dreams. You can't just build it and expect people to come. You have to put some effort towards social media. It's not a set it and forget it strategy. It does require some dedication, but know that you can successfully manage the risks associated with the use of social media, and that's obviously what we're spending time today talking about. So when we look at the social media landscape, the social media landscape is huge and overwhelming. There's hundreds of social media channels, and they kind of continue to grow. There's channels relating to specific audiences, whether that's obviously, general account holders or business account holders, specific interests, specific locations, specific purposes, and things like that. So a question popped in, will a recording of this session be sent out afterwards? And the answer is yes. We are recording the presentation, and you'll get a link to that recording later this afternoon. So when we look at the benefits of social media marketing, there are obviously numerous benefits, as you can see on the screen here. The goal, obviously, of social media, the reason that you're participating is all of these things, but the end result that you're really looking for is account acquisition and sales. That is achievable, but it's not really measurable at a one-to-one type relationship. So think more of social media as branding and awareness and community building, but it will lead to account acquisition and sales opportunities. But like a lot of your marketing efforts, it's going to be hard to measure, to the nth degree, so to speak. So we'll talk about a few of the most popular social media channels before we dive into all the compliance stuff. Why Facebook? Well, Facebook's the biggest platform out there, right? When we look at the number of just the sheer numbers, as of the end of the third quarter, which is the latest numbers that Facebook published, they have 2.45 billion monthly active users, 1.6 billion daily active users, And when you look at the numbers in the US, there's 189 million daily users active in the US, which is twice the number of people that watched the Super Bowl last year. That's a huge number. 71% of Americans now use Facebook. Compared to the other social media platforms, that's still dominant. And we keep hearing that, the younger generations aren't using Facebook quite as much. They're not publishing to Facebook quite as much, but they're still listening and they're still watching and consuming content on Facebook. They're doing this every day. So while I agree that Instagram and other platforms are certainly growing with the younger generation and they're publishing to those platforms probably more, I guarantee you if you talk about them on Facebook, they're going to know. 52% of U.S. adults get their news on Facebook. Not sure if that's good or bad. Kind of scary probably, but that's a huge number. Americans spend 58 minutes per day on Facebook, with each visit lasting 10 to 12 minutes. They're not spending 10 to 12 minutes at a time on your website. They're spending 3 minutes on your website on average. And 1 to 5 internet page views in the U.S. occurs on Facebook. Facebook is the dominant social media platform still. There's just no question about it. When you compare that to Twitter, Twitter measures users, by the way, with a term they call monetizable daily active users, or MDAUs. That is the number of people that could potentially see ads, what they mean by monetizable. So they have 145 million monetizable daily active users, 30 million of them in the U.S. That number is growing. 22% of U.S. adults use Twitter, 44% of U.S. 18 to 24-year-olds. There are 500 million tweets sent a day, which is over 5,700 per second. But that number really hasn't changed in several years. So it's a huge number, right? It's a huge stat, but it hasn't changed. Tweets with hashtags get 100% more engagement. So I encourage you to use hashtags in your posts, but don't use too many of them. Use only about 1 or 2 in your posts, because too many actually just get drowned out and they don't get any engagement then. And Twitter is huge for video, and it's huge for video. So 2 billion videos are viewed on Twitter every day. LinkedIn obviously is the place for business, engagement. There's 645 million total users on LinkedIn, 177 million in the U.S. 51% of Americans with a college degree in the U.S. are on LinkedIn or use LinkedIn. I have a typo there. I apologize. 45% of LinkedIn users are in upper management. The important thing to know there is that the decision makers congregate on LinkedIn. So 91% of executives rate LinkedIn as their first choice for content. And there's a considerable number of LinkedIn users that don't have a Facebook or Twitter profile. And lastly, I talk about Google My Business, because Google My Business is how you actually manage your info on Google Maps. But it's also relevant in web searches and critical for your search engine optimization, because Google Search or Google Maps, Google My Business, is much more than just your name, address, and phone number information. You can publish information about your bank and credit union. You can publish your hours. You can even post updates similar to Facebook posts. And Google reviews get shown on your Google My Business profile. Google reviews are trusted. They affect your search placement, and you can ask for them. You can actively go out and ask, customers, account holders, members that have positive, experiences at your banks and credit unions for Google reviews. Here's the thing that scares the compliance people, is you can't edit or delete Google reviews. So you want positive Google reviews and not negative Google reviews, which is why you want to go out and actively ask for them. You can flag fake reviews as inappropriate, and you can expedite this process. We'll talk about this again when we talk about some of the risks with social media. But Google reviews is a huge thing that you need to start. If you're not already doing that, You need to obviously monitor them, which we'll talk about, but you also need to make that part of your marketing plan. We'll talk about that actually in next month's webinar. So we talk about how often you need to post to your social media channels. You need to post quality content often and continually monitor your page for social interactions. So how often should you post? You should post 3 to 5 times per week, and you should post updates during your business hours because people know when you're open and they want you to be, basically transparent. Highest traffic does occur midweek anyway, between 1 and 3 p.m., which is when you're open. And on Thursdays and Fridays, engagement is 18% higher. So apparently we stop working middle of the day and don't work too much on Thursdays and Fridays. But let's jump into some of the compliance stuff because that's what we're all here for anyway. So the FFIEC social media risk management guidelines are not new, right? We're not talking about new information. We're just kind of going back and reviewing it. These were issued initially in December of 2013, and you can see the link to the press release when they were reviewed, and you can read them all yourself. It's fun and exciting reading. The guidance does not impose any new requirements. There's not new compliance revelations in these guidelines. It's really a guide to help you understand how to apply existing regulations and requirements and expectations as you use social media. But I've gone through and I've summarized what the guidelines say. I've added some additional insight and kind of brought them current with some new information. So as you read the guidelines, there's kind of some clear components that it has. First, it expects you to establish roles and responsibilities. How your social media contributes to your strategic goals, whether those goals are brand awareness, advertising. What are your goals for social media, and how are you going to measure those? And then what are your controls? What controls do you have in place, for kind of assessing the risk and managing the risk with social media? We'll talk about obviously all of this in more detail. What are your policies and procedures regarding the use and monitoring of social media and compliance? Now, these policies and procedures can be standalone policies or incorporated into all of the other policies that you have. You need to address risks from online posts, edits, replies, and also retention of those posts. And you need to have functions to ensure ongoing compliance with your internal policies and all applicable laws and regulations. So again, this isn't, stuff that you're not already doing. It's just kind of extending that to social media. And you need a process for selecting and managing social media third-party relationships. So if you're using an agency like LKCS to help manage third-party, and even which social media channels you're using and how you're keeping up with changes to those channels. And then you need an employee training program. So policies and procedures for the work-related use of social media. And other uses of social media, including what's not permissible for employees to do. We'll talk about that. And an oversight process for social media posts that your team is posting or a contracted third party that's posting on your behalf. And how you're reporting to the board or senior management to evaluate the effectiveness of social media and your progress towards those stated objectives. So when you look at social media risk, there's really 3 risk areas. There's compliance and legal risk, there's reputation risk, and there's operational risk. And we'll dive into all 3 of these areas, spending most of our time on the first one with compliance and legal risk. So when we talk about compliance and legal risk, the key point, and the point that can probably get you in trouble if you don't follow it, is the 1-click away rule. Your posts that would trigger a required disclosure or include can either have to include the required disclosures or include a link that takes your users directly to those disclosures. Those disclosures can be no more than 1 link away from your social media post. So you can link to a page that includes the required disclosures, but you cannot link to a page that links to another page that has those disclosures. So the landing page that you're sending people to from your social media posts has to have all of the required disclosures that would potentially get triggered. So let me make that clear again. The page that you're sending people to from your social media posts has to have all of the required disclosure language on it. You cannot send people to a page that then links to all of the required disclosures. So when we look at the Truth in Savings Act, Reg DD, and for credit unions, Part 707, the Truth in Savings Act says that a depository institution may not advertise deposit accounts in a way that is misleading or inaccurate. Obviously, this applies to all of your advertising, again, not just social media. But the FFIEC guidelines, again, go through what the triggering terms are, so I'll explain them. Again, this is basic kind of advertising compliance, but your triggering term with the Truth in Savings Act, one of them is an APY. If you state a rate, APY, annual percentage yield, anything that refers to the APY, you have to then disclose a variable rate statement if that's applicable, if it's not a fixed rate. You have to disclose the time period available, a specific date reference, or that it's accurate as of the publication date. So you cannot state that that rate or APY is available for a limited time only, or that this offer may be withdrawn at any time. You have to actually say that it's available from this date to this date, or it's available through a specific date, or it's accurate as of the publication date. If it's a specified date, the date has to be close to the publication or broadcast date. It can't be, 6 months from that time. So you have to, if it's shown on your website, for example, it actually has to be fairly recent. You have to keep it up to date. We see a lot of times that, rates aren't updated frequently, and that's potentially could be a problem. Now, none of the guidelines that I read say what is close to the publication or broadcast date. What do they consider close? So you'd have to ask, your compliance team with that. What's close enough? I don't have an answer for you. You have to disclose the minimum balance and minimum opening deposit required if that minimum opening deposit is larger than the minimum balance that's required. And then a statement that fees could reduce earnings, which wouldn't be applicable for CDs. And then 4-year time deposits or certificates, the term of the account, and a statement that a penalty may be imposed for early withdrawal. So for APY, those are the disclosures that would need to be in place either as part of the social media post, which is probably not likely, but would have to be disclosed on the landing page. If you use the word bonus or anything that is like a bonus, then you have other disclosures that have to be in place. Now, a bonus is a gift or an award that is worth more than $10. You can give anything away that's less than $10, and this is a $10 award over a period of a year. So if, it could be an accumulation of either cash, credit, or merchandise during a year that is more than $10, that's given in exchange for opening, maintaining, or renewing an account or increasing a balance. So the term bonus does not include interest or any type of waiver or reduction of fees. So that's what a bonus is. But if you're giving a bonus, a gift, an award, a promotional item, anything like that, if it's worth less than $10, great. You don't have to disclose anything. If it's worth more than $10, you have to disclose the APY and all the disclosures then that go with APY from the previous slide. And any time and minimum balance required to obtain the bonus and open the account, and when the bonus will be provided. Phew, fair lending. So we moved now from deposits to lending. And this is fair lending specifically for home loans. So the Equal Credit Opportunity Act and the Fair Housing Act. So the Equal Credit Opportunity Act prohibits creditors from making statements that would discourage anyone from completing an application. But you can specifically solicit or encourage members of any disadvantaged groups to apply for credit. Now, you cannot request information about an applicant's race, color, religion, national origin, or sex. So here's the interesting information is that social media platforms collect this data for you. So you have to make sure that you're not requesting, collecting, or otherwise using this information in violation of applicable fair lending laws. Where this comes into play is with social media advertising. And we'll discuss that more in a little bit. So you have to just make sure you're not using the information even though the social media platforms are collecting it. The Fair Housing Act prohibits discrimination also based on race, color, national origin, religion, sex, familial status, or handicap when it comes to mortgage lending. And it makes it unlawful to advertise or state a limitation on preference based on those things. So the thing that you have to be careful of here is when you're posting images with your social media posts or videos, which is obviously important to do and recommended, that the human actors or models that you use in your photographs or videos need to represent the racial or ethnic groups in the communities you serve. So don't just use stock photography of all white people as an example if in the communities you serve there's a significant population of minorities. It's going to get you in trouble. The equal housing lender or equal housing opportunity logos, both the graphic, the doghouse with the equal sign and the wording must be displayed on your social media profiles. So the Truth in Lending Act, or Reg Z, moving on from mortgage lending into consumer lending, advertisements relating to credit must present info in a clear and conspicuous manner. Disclosure requirements vary now based on whether the credit is open-ended or closed-ended. And the way that Reg Z works, Truth in Lending works, as you probably know, is that there's triggering terms. And if you use any of the triggering terms, you then have to disclose the triggered terms. So triggering terms with closed-end loans is the amount or percentage of a down payment, the number of payments or period of repayment, the amount of any payment, or the amount of any finance charge. Notice that with closed-end loans, nothing referring to rate or APR is a triggering term. With closed-end loans, rate or APR is not a triggering term. But if you use any of the triggering terms listed, then all of the triggered terms have to be disclosed. So the triggered terms are the amount or percentage of a down payment that's required, the terms of repayment, the annual percentage rate has to be disclosed, and if that rate could be increased. And with open-end credit, we're talking about a line of credit where you would impose a finance charge on the unpaid balance. So typically credit cards, home equity lines of credit, overdraft protection, agreements, those types of things. So same thing, there's triggering terms and open-end triggered terms. But with an open-end loan, the rate or APR is a triggering term on an open-end loan. So is any type of finance charge calculation, the finance charge accrual timing, when does that finance charge start accruing, which includes any type of free ride period, right? You don't, no finance charge for 90 days type of thing. Balance computation method, how are you, computing that balance? Any type of other charges, and then repayment terms on a home equity loan. So if any of those triggering terms are used, the triggered terms must be disclosed. Again, this would happen on a landing page. I can't imagine that you're going to disclose all of this in a social media post. But you would disclose the finance charges, the APR, a variable rate, if there is a variable rate, membership or participation fees, and with a home equity loan, you would have to disclose all fees and the maximum APR. Lots of information I'm throwing at you. So with the Truth in Lending Act, there's also specific requirements regarding equal prominence and close proximity. And we see that there's mistakes with this all the time. So when we talk about equal prominence and close proximity, we mean information that is immediately next to or directly below or above the advertised rate or payment is deemed to be in close proximity, and information that is of the exact same type size as the advertised rate or payment is deemed to be of equal prominence. So with promotional rates, and that's for any closed-end home equity or any type of open-end loan, you have to equally show the term that the reduced rate applies and the APR that will apply after the initial rate reduction expires. And those have to be shown in both equal prominence and close proximity. And the same is true for balloon payments. So anytime that somebody can make a lower payment and then would have to make up at some point those payments, you have to equally show the amount and timing of the balloon payment if the consumer makes only minimum payments with equal prominence and close proximity. So you can't have a really big, introductory rate and then somewhere have fine print with a smaller rate and term. They have to be the same prominence and right next to each other, equal prominence and close proximity. When it comes to deposit insurance or share insurance, for FDIC insured banks, you have to include the official advertising statement of FDIC membership, usually the worded member FDIC on your social media profiles. And for NCUA insured credit unions, you have to include the official advertising statement of NCUA membership, usually worded federally insured by the NCUA. Now, obviously, each social media profile is different. Here I've included a screenshot of one of our customers' Twitter profiles just to show you how they did it. They're doing it with their Twitter image. Facebook and Twitter, you've got a large cover image that you can use. Other profiles obviously are different. We also recommend that you include that text, as you can see here, in kind of the about text of your institution, so you're covered as well. Investment products, you guys know this for those of you that have an investment division. When you're promoting non-deposit investment products, you need to inform customers that the products are not insured by the FDIC or NCUA, that the products are not deposits or obligations of the institution, are not guaranteed by the institution, and that the products are subject to investment risks, including the possible loss of the principal. So moving on from those into privacy. So this is where we get into some new stuff. So everything that we've talked about so far is kind of general advertising compliance. GLBA, right? The Graham-Leach-Bliley Act. So this is not new, but you have to link to your privacy policies from social media profiles when possible. And obviously, whenever you collect or have access to information about consumers, all privacy laws, Graham-Leach-Bliley Act laws apply. With your social media, we also recommend that you have a separate social media or online privacy policy. You need to publish your rules, regarding social media or online, your online rules, how you collect and use any digital data. So there's lots of examples of these out there, but you need to disclose your use of cookies, whether you know you're using cookies or not, you're using cookies, how you might be using remarketing or retargeting with advertising, and how your account holders or visitors can opt out, and that opt out is done through Google or Facebook. You need to discuss children's privacy. So you may not be intentionally targeting children, but you need to obviously disclose children's privacy. And you can say that we're not intentionally, promoting our products and services to children. You need to disclose your links to third-party sites, right? We don't trust their content, but similar to the disclaimers that pop up on your websites, should be in your social media or online privacy policy. And then you should have participation guidelines similar to the example that we're showing here. And we also recommend putting the participation guidelines in clear text right in your social media profiles, particularly on Facebook. Twitter doesn't really give you a good place to put this. Facebook does. There's an impressum section in your Facebook profile that you can put this in, or you can actually put it in the About Us, right in the kind of the little story section. You can put this information in. Next tidbit of news for you is the GDPR, CCPA, and whatever comes next. So you've probably heard of the GDPR stuff. So the General Data Protection Regulation went into effect in May of 2018, and most of us didn't pay a whole lot of attention because it had to do with European residents. So we read about it and we were kind of freaked out about it, but didn't really do a whole lot because it was mainly in Europe. The CCPA, however, which is the California Consumer Privacy Act, just went into effect in January, and it applies to all California residents, not just companies headquartered there, but any companies that have customers in California have to abide by the California Consumer Privacy Act. We're going to talk about it. But know that there are also similar privacy bills currently pending in New York, Massachusetts, Maryland, Hawaii, and South Dakota. These privacy acts are going to spread. There are going to be more of them. So we need to be aware of the requirements and figure out how to deal with them. So when we look at the California the California Consumer Privacy Act in particular, one of the good things, I guess, for banks and credit unions anyway at a CCPA is that GLBA data, member and customer account data, is exempt from CCPA. So we don't have to release all of the confidential customer information that we have, account information that we have on our account holders. But CCPA pertains to marketing and advertising activities like email addresses, IP addresses, browsing history, the records of products people have considered, and all of that type of information. So the CCPA says that California residents have the right to know what personal information is being collected about them. They have the right to know whether and how their personal data is shared or sold and to whom. They have the right to prohibit the sale of their personal data, meaning they have the right to opt out. They don't, when they say sale, they also kind of mean share. Third-party advertising via a cookie is considered a sale in California. So when we look at social media and social media advertising, that is considered a sale of personal data. And then also residents in California can request access to their personal data online or by phone, and in some cases in person, email, or via postal mail. And then we have to give them their personal data. Interestingly, the exception about GLBA data does not apply to commercial accounts. And CCPA does apply to businesses. So if you're doing business with businesses in California, you may have to release account data to businesses. So you might want to rethink, if you're not located in California, doing business with businesses in California. A lot of information there, a lot of scary stuff. Let's show you how one option that you might want to consider to get ahead of this kind of stuff. So you've seen this type of banner appearing at the bottom of a lot of different websites that you visit. This cookie consent management solution, these types of solutions are being put in place for this type of purpose. So this example actually comes from one of our clients. It's First Florida Credit Union. You can see it on their website at firstflorida.org. We implemented this for them. They're in Florida. They're not under any requirement yet to implement this, but they wanted to get ahead of these regulations. So this system that we've implemented actually generates online privacy policies, cookie policies, a variety of different disclosures. It collects and logs consent for all non-essential cookies, and it allows users to set their cookie preferences by category. So you can see that on the right. So a visitor can come to your website. They can accept all cookies by clicking the little button that says accept cookies. You can actually set it so that if they just scroll on the page, it automatically accepts all cookies. But if they were to click the cookie preferences button or link, they would actually pull up this little pop-up, and then they can choose which category of cookies they would allow. And if they were to actually expand one of these sections, they would see very detailed information about every cookie that's on that site. And when we talked about children's privacy a few minutes ago, they actually automatically block cookies from any page that has content that might be relevant to children. So examples are they have a kids club page, they've got some videos about kids savings, things like that. Those pages, they automatically block all non-essential cookies from all users, so they don't have to worry if there's any children that might be visiting those pages. They're not setting any cookies. So this is one thing to consider to get ahead of some of those regulations. Not necessarily relating to social media, but online. So we're switching now into the reputation risk category of risks, of the 3 risk categories. So when we look at reputation risk, there's obviously risk relating to fraud and brand identity. So this relates to comments made by social media users, the potential for spoofing and phishing. So what you need to do here is you need to control your brand. We're going to show you how you do this in a little while. But you need to establish your social media profile so that you own the conversation, which will enable you to answer questions and solve issues that you uncover. And you need to monitor social media and the internet as a whole so that you listen for and consolidate mentions and reviews, right? Anybody that mentions the name of your institution, any reviews, so that you know who's talking about you, and that you receive notifications and have the ability to respond to comments and activity on your social media profiles. The third-party concerns, right? You need to review and approve social media content before it is published, and you need to perform due diligence appropriate to the risk posed by the service provider. And then the FFIEC goes on to say that you can measure that risk as indicated by their reputation in the marketplace, their policies on the collection and handling of customer information, and what control you have over the third party's policies or actions. Obviously, there's privacy concerns. So what is the potential reaction of the public to any use of consumer information via social media? And so you need to establish procedures to address occurrences such as a social media user posting confidential or sensitive information, such as their account numbers on your social media page. They ask a question and they just put in, hey, my account number is, or they put in somebody's name, anything like that. What is your procedure when that happens? So you need to receive notifications and respond to posts and comments and activity on any of your profiles. You need to remove comments or posts that violate privacy or confidentiality policies, contain vulgar language, etc., which also relates to obviously properly configuring your social media profile settings, because some of this can happen automatically if it's set correctly. Consumer complaints and inquiries. Reputation risk exists when you don't address consumer questions or complaints in a timely or appropriate manner. It's not that you're not going to get some complaints. You may. It's going to happen a lot less frequently than you may think, but you need to respond to them, and you need to respond to them quickly. And you may be exposed to risk when users post critical or certainly inaccurate statements. So again, you need to receive notifications and respond to posts and comments and activity on your profiles. You need to listen for and consolidate mentions and reviews. And we're going to talk about how we can do all of these things. But let's talk for a few minutes about dealing with negative posts. And I'll show you some strategies and some recommendations on how to do that. So when we talk about negative posts and negative comments, you can turn negative comments into positive opportunities. The one thing you don't want to do, and the regulators and examiners don't want you to do, is to delete negative posts. You need to keep them visible. First, people know that not everyone is always happy with their financial institution, or any business for that matter. You certainly need to remove any posts that are inappropriate or offensive, that contain vulgar language, that violate your policies like we talked about. But people who post negative comments want a reaction. And deleting that post doesn't diffuse the situation. It just makes it worse, because they'll complain somewhere that you cannot respond to it. So it's how you respond to these negative comments that make the difference. And you might not be able to save the relationship, with that person that's complaining, but it's how other people see that, see that response that may make all the difference. So here's some examples that you can take back, and obviously make these your own, edit them as you want. But these are somewhat common complaints that we see. You deny somebody for a loan, and then somebody complains that obviously they were denied for a loan on social media. And, here's ways that you could potentially respond. Take these conversations offline, right? You don't want to get into a debate. But you're the social media team, right? You're not the person that denied them for that loan personally in most cases. So, you can explain that. Like, let me get your contact information. If you're able to use, Messenger, for example, Facebook Messenger, which is a secure chat platform, you can take the conversation there, so you can have a one-on-one chat. But respond publicly so that other people who have seen that complaint know that you've addressed it and have given a way for that conversation to continue. Same thing for a general customer service complaint. Thank you for bringing this to our attention. Can I have a manager contact you? Or here's my phone number so that you can call me so we can discuss this further. Thank you for bringing this to our attention. I'll be sure to bring this up, at my next meeting, or discuss this with my supervisor. Anything like that you need to do, to show that you've gotten the complaint, you've logged it, and, move on from there. High fees, bad rates, those types of things. You're obviously not going to get into a debate about those types of things. Maybe there's an opportunity, obviously, to have that account holder come in and, work with them still, or something like that. But, here's different strategies that you can use to diffuse the situation online, let everybody see that you've answered the question, addressed the complaint. And obviously working on that relationship. We talked about reviews earlier, and specifically Google reviews. So there are fake reviews, and that's one of the problems, right? Is that, there's spam and there's even competitors out there, hopefully not in the banking world, I would hope not, but, that are posting fake reviews. So when that happens, here's the approach to take. First, you can sign into Google My Business, and then here's the way to flag a review as inappropriate so that Google can investigate and hopefully remove it. You do not have a way to delete a review. So you can't delete it, but you can flag it as inappropriate. But then we recommend that you respond to fake reviews. And I realize it's totally counterintuitive. Like, if this person doesn't even exist, if it's spam, why are you responding to it? But again, it's showing other people how you handle criticism, whether that criticism is valid or not. So, hi, Sid, right? We take these matters very seriously. Unfortunately, we have no record or recollection of any member or customer experience fitting the name on this social media profile. If you're a client of ours, we would like to investigate this issue further. Please contact, somebody's name immediately at some email address so that we can resolve this issue immediately. And that's it. Everybody will out there read, and they'll be like, hey, that person doesn't exist. So you can diffuse the situation. Again, one of the FFIEC guidelines regards, several actually of their guidelines regard employees' use of social media. So employees' communications via social media may be viewed by the public as reflecting the financial institution's official policies, which could be a problem. And that could subject you to compliance risk, operational risk, and or reputation risk. So you need to establish policies and training to address employee participation in social media representing your financial institution. So an example actually used by the FFIEC is an employee communicating with a customer about a loan product through an approved social media channel. What are they allowed to say, not allowed to say? What training are you going to provide to your employees about communicating, with customers? And how are you going to monitor the employees' use of social media? So here are some examples of things that I think you should include in an employee social media policy and training. So know that, obviously we respect our employees, right? They should understand their rights, your policies, and encourage them to read the National Labor Relations Association's policy on employees' rights on social media. But they should know that everything is public and permanent, even posts that are deleted. They should speak up, right? If they see something online that the social media team should be aware of, they should show it to you. You can't be everywhere at all times, regardless of what monitoring systems you have in place. They might find something that you didn't see, so they should tell you about it. A few don'ts, you want to make sure that they're not publishing material that is copyrighted or confidential. You want to make sure that they don't reference customers, clients, or partners without their specific approval, that they don't provide member or customer service through their personal accounts, that they don't comment on news of your organization unless they are approved to do so. And then in case of an emergency, in times of crisis, disaster, or emergency, only employees with the authority to speak on behalf of your financial institution are permitted to do so. But encourage your employees to share official content via their social media channels. So those are all things that I think you can include or should include in your social media policies and training documents. Moving on to the last category of operational risk, which is the risk of loss resulting from inadequate or failed processes, people, or systems. So social media sites are considered to be vulnerable to account takeover and the distribution of malware. So I tend to disagree with that statement, but that's what the FFIEC says. So ensure controls to protect system and customer information from malicious software, addresses social media usage, and obviously include social media in your data security incident response protocols. So it's kind of a to-do for your IT teams. Phew. We got through the hard stuff. I've got a few minutes left, so I want to jump through kind of systems that you can use to monitor some of this stuff, a little bit about what makes good content. I'll fly through some of the information because we're short on time, which I expected, but what makes good content? Photos and videos make good content. Links make good content, but don't just link to your website. Use the 80-20-20 rule. 80% of your posts need to give value to your fans. They need to be educational. They need to be informational, not just sales messages. The language you use needs to be friendly. Don't just use bank jargon and it needs to be informal. And definitely reply to fans when they comment. That's going to encourage fans to interact more. We hear all the time that it's hard to find social media content. It's not that hard. Ask people within your institutions, ask your HR people, ask your frontline staff what questions people have. Obviously, you can post information about your products and services that isn't sales related. Talk about features and comparisons between your different checking accounts and things like that. How to pick a mortgage, right? What's the difference between a home equity line of credit and a home equity loan, for example? If you produce a newsletter, they're chock full of social media posts. Don't post them all in the same week. Spread them out. Your community events that you participate in, talk about them before the event that you're going to be there. Post live videos while you're there, and then post after the event. Photos, things like that after the event. Your business customers, talk about their grand openings and their sales and specials and their new restaurant items or realtor listings, all that type of stuff. So the goal is to increase engagement because engagement is critical. So you need to ask people to engage. You need to ask for comments. You need to ask them to answer questions. You need to ask them to fill in blanks and fill in captions. And basically, you're asking for comments, not asking for likes. There's a big difference. Asking for likes is bad, and I'll show you why. So here's some numbers. Your average engagement rate for a Facebook post is only 3.6%. People like to read and view and things like that. They don't like to engage. They don't like to comment. You won't know that everybody's out there. The average engagement rate on a video post is 6%. Videos get more engagement. People watch videos. The average organic reach for a Facebook post is only 5.5%. That means that Facebook is only going to deliver your posts to 5.5% of the people that follow you on Facebook. And that's the rub. So how do you increase that organic reach? Well, great posts are going to go viral, but in reality, there's a pretty slim chance of that happening. The more interaction your posts get, the more people that share your posts, the more people that comment on your posts, the more people Facebook will show your post to organically. Comments see a major boost in organic reach. Posts that get comments see a major boost in organic reach. Go live. Live videos get a huge reach advantage, and users spend 3 times longer watching live streams than watching recorded videos. But never resort to engagement baiting. Do not post posts that say like this if you agree with or like this if that. Don't post tag 10 friends who. Don't post share with 5 people for a chance to win. Do a Google search on engagement baiting to see exactly what Facebook considers engagement baiting. Facebook will penalize your entire page and not just a single post for that type of behavior. Ask for comments and not just for likes and tagging. So I've got a comment here that says that Facebook has become very strict when it comes to asking for comments. Anything with a strong call to action can be flagged, especially if you're running an ad. I'd have to check on that. I haven't heard that asking for comments has been an issue. So it's possible, but I have not seen that yet. So I will look into that myself. Thanks for the comment. Facebook isn't free. So I encourage you to look into Facebook advertising. You can boost a post. Boosting posts is a form of Facebook advertising. I hear all the time that boosting posts is kind of the lazy way of creating an ad. It is. But if you have a post that gets good engagement, I've never said there's a bad reason. It's not a bad way to increase engagement or create an ad. But this brings us into some of Facebook's changes. So for banks and credit unions, Facebook has created a special ad category. If you run an ad or boost a post relating to loans, credit cards, mortgages, home equity, or homeowners insurance, there are limitations on audience selection criteria. So who you can target your ad or boosted post to. And this is all implemented to prevent discrimination, which is important. You can no longer target audiences for these types of ads based on age, gender, zip code, saved audiences, so audiences you targeted previously, or lookalike audiences. Lookalike audiences is you would have an audience that you targeted for an ad or a list that you uploaded and say, I want to send an ad to people that look just like these people. Advertisers cannot target an area smaller than a 15-mile radius. That is a big area, especially for some credit unions. A lot of interests are no longer available to special ad categories advertisers. So you're going to need to get creative. When you start pinpointing interests, a lot of interests are no longer available. So for example, we used to target entrepreneurship. We used to target small business owners when we were running some type of ads, type of business loan ad, commercial loan ad. Now, instead of targeting small business owners, we'll target entrepreneurship because that's still allowed. So you have to get creative. But essentially what's going to happen now with Facebook ads is you're going to be targeting a much broader audience than you were able to before. And that is a limitation that's been put onto you by these special ad categories. But from a compliance perspective, it's designed to prevent discrimination. Know that for your deposit accounts and ads relating to general branding, things like that, those ads do not fall under the special ad categories requirement. However, they need to run in separate ad groups and things like that within your ad campaigns. I'm at the end of the hour, so I apologize. I'll keep going for any of you that want to stay on, but I have gone over on time. So I understand if anybody has to drop off. We're going to just finish up on some of the compliance requirements and how you deal with some of these challenges. And like I said, the presentation is being recorded, so we will be sending out links to the video. So if you do have to drop off, you can catch up on the last few minutes afterwards. But when you post your social media posts, I certainly encourage you to make your posts easy to understand. And again, always reply to questions in your social media channels, but use your best judgment to respond appropriately. And if you don't know the answer, let the user know that and post the answer later. Don't answer with bad information. Always ask for help. When it comes to competitors, be sensitive about who will see your social media posts. Don't try to get even or engage competitors in a debate over social media. So if you choose to engage in a discussion with or about a competitor, any facts you cite must be verifiable with a link to a reliable neutral source that's accurate. I don't recommend that you engage in a debate about a competitor. Social media is not to be used to diminish the reputation of your competitors. It's kind of common sense, but it happens. For managers and supervisors of employees, assume that your team will read anything you write or post on social media, even obviously your personal social media posts. Clearly, social media is not the place to enforce financial institution policies or reprimand employees, and consider whether any thoughts you publish might be misunderstood. They will be misunderstood. And you may want to discourage employees who supervise other employees from interacting with subordinate employees on social networking sites. Now, you may want to discourage that from happening. You cannot forbid that from happening, or you'll be in violation of the NLRA rules. So read those guidelines. With copyrights, when you create your posts, you can include links to copyrighted works hosted by copyright owners and their resellers. You can share excerpts of articles and copyrighted works of up to 140 characters, including spaces, as long as you include a link to where that work is publicly available, as long as you're not trying to undermine the financial objectives of that copyright. And you can embed or share copyrighted content in your social media accounts if the embed code or share link has been provided. So if there's a YouTube video that you like and the share link is included, or a Vimeo video and there's a share link, you can share that video on your Facebook profile or Twitter feed without risk of a copyright infringement, as long as you share it directly from YouTube or Twitter or Vimeo. Just don't try to scrape that video off if that share link isn't provided. What you cannot do is go to Google, do an image search, and just arbitrarily save an image and post that, assuming that it's not copyrighted, because you have no idea. And we see that all the time. So with photos, we recommend that you either get, a subscription service or use one of the free stock photo services that are out there, and there are several, and use photos that you know are not copyrighted, or take your own. But social media can be managed efficiently and affordably. You need a tool. You cannot manage social media without some kind of third-party tool, because complete social media management includes publishing and scheduling, monitoring and listening, and reporting and analytics. There are lots of choices available. These tools start at $60 per month on the low end, and they go up to over $1,000 per month on the high end. But know that you need a good platform. Some to consider, the ones you've probably heard of, are Hootsuite, Sprout Social. Ones you might not have heard of are eClincher and Mav Social. Those four are definitely worth looking at. And of course, I definitely recommend LKCS's social media management platform. I think we've got the best one out there. We researched lots and lots and lots of these different platforms before we chose to offer one ourselves. So some features and functions to look for are obviously publishing. You want to be able to post and schedule content across numerous social media sites at once, include text, photos, links, videos, all that type of stuff. You want to be able to preview and edit your scheduled posts. You want to be able to review posts that you've already sent. But check which sites are supported. Look for limits on the number of profiles that you can connect, because some have limits. And look if you can do a bulk import of posts from an Excel spreadsheet, because that's a huge time saver, especially when you're reviewing posts with compliance teams. You're able to send a spreadsheet to compliance. They can review and sign off on those posts, and then you can import them all at once. Here's an example of publishing with the tool that we use. So you can see on the top that I'm able to select multiple social media profiles. So I'm selecting Facebook and Google My Business and Twitter and LinkedIn, and even I'm sending to a Slack, instant messaging platform all at once. I'm able to create my post, including links and an image that I'm using. I'm actually able to edit that post for each one of the social media profiles. So while I create the post once, I can then customize that post if I want to for each of the profiles. The system gives me a character count, so I can make sure, especially for Twitter, that I don't go over that limit. I can preview what that post looks like on each of those profiles before I publish it if I want to, so I can make sure that everything looks good. And then I can schedule that post ahead of time. So I can build this post now and schedule it into the future. The system even gives me a recommended time for when it sees that I will get the most engagement based on my history. And off I go. I can then, depending on permissions, I can send this post for approval, or I can schedule the post if I have permission to actually schedule it without getting approval. Monitoring functions, you want to look for a tool that has a unified inbox that consolidates all posts and comments for you in one spot. The best systems have automatic sentiment scoring, so you'll know which comments are a positive, comment or a negative comment coming in. You want to be able to respond to posts and comments directly so that you don't have to log into multiple social media profiles, and even respond privately, like through Facebook Messenger and things like that. Keyword searches, you want to be able to set up keyword searches across social media, review sites, and the web for all mentions of your names, your product names, your competitors, your executives' names, your board members' names, any type of mention, that would, mention your brand. And look for limitations again in the number of searches you can specify, because some systems say you can only build so many searches without costing you more. And then you obviously want to receive email alerts or text message alerts, regarding these monitors. So here's an example of monitoring for you. So we set up a monitor, in this case for anything relating to the statement services that we offer. So this was, some mentions that came in relating to statements. I'm able to see the profile of the Star One Consult. I didn't know who they were. So I clicked on the Star One Consult Twitter profile, and I was able to view the profile. So without even going to Twitter, I can see the profile information of this individual. I can see his name is Michael Bell. I can learn information about him. I can actually see his timeline, so I can see what he was posting about. I even get information from a website called TrustFlow. From Majestic, which uses TrustFlow, computes TrustFlow. I can see how trustworthy this individual is and how much influence he has on social media. So this might be a consultant that I want to reach out to possibly, retweet my information or, get in touch with and kind of woo into a relationship with. So I can, learn more about him. I have the ability to like his post. I can flag this information as positive or negative, since the system in this case did not give it a positive or negative score. It didn't, automatically give it a sentiment. I can retweet or reply to his post right here without having to go to Twitter in this case. And I can do the same thing for any social media profile. So you'll see down here the bottom example came in from Facebook. I would see LinkedIn information. I could see any social media profiles all from the same place. You'll see here the sentiment scoring. So this post below came in with a positive sentiment. I can teach the system. It has an artificial intelligence engine, so I can override all of that and teach it. Reporting. So this is how we meet the FFIEC's requirements to keep management and the board informed. But you want to be able to configure and schedule stock and custom reports. You want to track the metrics that are most important to you from each of your social media profiles, and you want to identify the posts with the most engagement so you know which ones work the best. And you want to archive all of your posts. And reporting can do that. So here's some examples, some snippets of some reports that our system provides. So at the top, you'll see an engagement overview report. The middle is just kind of the summary of Facebook activity. And at the bottom, you'll see some publishing behavior, a number of kind of posts by day, best time to post, those types of things from our overall social media strategy. You'll see a summary here of our top performing posts and then page impressions. So you'll even see, you can scroll over it by day, but you'll see how many impressions we received organically, what the viral spread was, and then you'll even see paid impressions. So all of our activity gets consolidated in one little view. In this case, over a lengthy time period, but we can consolidate these reports, and these reports can be automated, so they can be delivered to you automatically, on a weekly or monthly basis, as PDFs or interactively as links, so that you can archive them, in a file and be able to pull them out at any point in time. And then lastly, in the reporting example, you can see your engagement, again by day or by week, and then demographics. So similar information as you would see, for example, in Facebook Insights, but in an easier consolidated view, and even across multiple social media channels if you want it. And then other social media platform functions, advanced functions such as the ability to override preview images when you post a link. You know how a link preview is generated. Sometimes the image that it picks or the description that it picks from that page is not appropriate, or you want to change that. You have that ability to override the preview images with some of these systems. You can publish and schedule when you publish a change to Facebook cover photos, Facebook photo albums, things like that. You can assign activities and responses to other users, other members of your social media team. So a question or comment comes in, you know who's going to be responsible to respond to that comment, because you can assign that. And you can even set up auto responders in some cases and auto followers for Twitter. And there's content curation. So when it comes to finding content to post, these systems actually watch what you post, they learn what you post, and they can recommend content for you to post in the future. And obviously you can search for content based on subjects as well. So that's all the information that I have. I appreciate you hanging around. A lot of information. I hope it was valuable and worth your time. Like I said, we will be sending out an email later this afternoon with a link to the recording, a link to download the presentation. I'm certainly available to answer any questions. Feel free to contact me offline as well. I'd be happy to demonstrate our social media management tool and explain its benefits in further detail. But definitely, I appreciate your time this afternoon, and thank you for joining our webinar today.